There is great excitement in the precious metals world as the mainstream media trumpets gold's rise to an all-time high and silver's vault to a 30-year high. So as excitement and public awareness of precious metals builds, how do we keep perspective on our own holdings? And how can a new silver investor make an informed decision to buy physical silver for the first time at today's prices? How valuable is 1 ounce of silver? The mainstream media constantly touts silver's all-time high as being $50 an ounce, which was reached in 1980 when the Hunt brothers cornered the silver market. So, how much money was $50 in 1980? Well, a movie ticket cost about $2.50, a first-class stamp cost 15 cents, and a gallon of gas was $1.25, while the median household income in the United States was $17,700. So, inflation means everything. Accounting for inflation is key when discussing silver. With that perspective, let's go back to the much-discussed $50 all-time high for silver. In today's dollars, the real all-time high for silver, when adjusting for inflation, is $138 an ounce. This, according to Eric King and esteemed economist John Williams. Just as a movie ticket in 1980 was $2.50, today a movie ticket is pushing $10. So too, the inflation-adjusted all-time high in silver is much higher than the oft-reported $50 an ounce. At today's silver price of approximately $21.50, silver is 57% below its 1980 high of $50. However, at $21.50 an ounce, silver is 85.5% below its inflation-adjusted all-time high of $138 an ounce. No wonder billionaire investor Jim Rogers often states that silver is still 85% below its high. To keep our perspective on the tremendous opportunity silver currently offers investors, we must remember, in 1980 when silver reached $50 per ounce, there was no derivatives bubble. There was no concern of fiat dollars flooding the world. There was no multi-trillion-dollar bailouts of Wall Street banks. And most importantly, there was no proven 100-to-1 paper manipulation of gold and silver markets.
Precious metals are financial assets, and like currencies and T-bills and T-bonds, they trade in the multiples of 100 times the underlying physical. They trade in the multiples of 100 times the underlying physical.
Silver is such an undervalued bargain, it defies belief, until you come to understand that the banks have suppressed the price with paper shorts and paper silver. Then, it makes perfect sense. At this very moment, we are living through dramatic historical events. Both gold and silver are now breaking the bonds of the manipulation that has long suppressed them. And silver, trading in lockstep with gold, is returning to its 5,000-year history as a monetary metal. The gains investors have made to date have been stunning. But as the bankers are forced to cover their short positions and the true value of these precious metals is once again rediscovered, the pricing moves for gold and silver that lie in the years ahead will be talked about for generations.